Hello merchants, and welcome to this week's analysis on the price of NIR. It's important to understand that NIR protocol is making huge movements. Price is changing drastically. Don't be left out. One thing you must remember is price will not stop moving, but what is important is you knowing where price is moving to so you can take the advantage of price movement. Right away, I'll be looking at different ways to confirm the movement of price and how to take profit from them. First of all, I'll be using pure price action analysis. Then I'll step onto the Bollinger Bands. You know, we've been talking about the Bollinger Bands for a couple of times now. So I'll also use the Bollinger Bands to confirm where price is going to. I will be using price action analysis, probably trend lines, and how to spot potential price movements direction. All right, let's not waste any time. Join me as I check out our charts. Let's look at our charts quickly so we can see what we have here for the price of NIR.
This is the NIR protocol USDT chart for 1 day, and already there was some kind of correction from the price of 12.9 as we saw yesterday. And from the analysis I gave, the written analysis, you remember I said that once the price gets to 13.7, between 13 and 13.7, there will be a correction and the price steps down a little bit before any further movement. So this correction had already started before the time of this analysis. So you can see here that the price now sits at about 10.9. 10.9, that's where the price is currently sitting. So look at this. Here we have a pennant. I told you that there was going to be a pennant, and here at A, that was the beginning of the pennant formation. We had at A, then it went to B, we saw the bullish movement at B, then it went further to C, and that was at C where we got the bullish move, that volatile move. So if I should add my my Bollinger Band indicator, you'll see that at this point C, where the bullish candle went high, volatility was large there, and the rebound, which is the bounce, the Bollinger bounce, is where we have the last two red candlesticks coming back. So, and if these two candlesticks have touched the middle band, there is bound to be another shoot up. You get the point? So let's just impute the Bollinger Band indicator and see what happens next. All right, so let's add the Bollinger Bands indicator to this chart. Okay, now at this point you can see the Bollinger Bands indicator. We have the candlesticks currently at the upper band. You know, there is bound to be the bounce, and the bounce has begun. Here you see the red candlesticks trying to come down. So we need some more day. Remember, this is the 1 day chart, so it will take some days further for these bounce to complete. So when the candlestick touch the middle band, then we'll notice a rebound. If it goes under the middle band and forms a new candlestick just under the middle band, then that means it's heading for the lower band. But if it just touches the middle band and then forms a new candlestick above the middle band, then that means it's going back to the upper band. So that was just a mere correction. So that's what we're looking out for. Remember, that's called the Bollinger bounce trading strategy. It's used to detect when to trade against the trend. You get the point? All right, so far with the Bollinger Bands indicator on the daily chart, here we may not be able to dictate where the market is going, because remember, Bollinger Bands don't also give you direction of market movement. It doesn't tell you what direction, but it helps you know if there's going to be a rebound, if there's going to be a correction, or if there's going to be volatility. So when you know that there is going to be correction, you trade in the direction of the correction, following some other indicators or probably price action. Okay, so that's that. So for now, this is what we get from the Bollinger Band indicator.
Okay, merchants, don't forget, if you've not subscribed to the channel, please hit the subscribe button, like the video so that you can always get content firsthand as soon as I drop them on the channel. Our concern is that you make profit. That's what we're concerned about as merchants of NIR. I want you to make profit. So always don't forget to hit the like button whenever you come watching our content, and as well hit the subscribe button if you have not subscribed. Okay, then let's move.
Look at some price action analysis, still using the 1-day chart. All right, here I've drawn two trend lines, one for the lows, the low we had at the last volatility to the new low after the recent volatility. So, and the other trend line is from the highs, the high we had from the last volatility and the high we have from the recent volatility. And you see here is the high. Now what's going to happen is we're going to see where price is going to following this chart, following this trend line, to see where price is going to. Look at this. So I'm going to shrink this a little bit, and let's follow this along the lows and see where price is heading. And here we'll follow this along the highs and see where price is heading to. So where both of them meet, the point where both of them meet indicates the new place where price should get to, as following the trends, and that's at a price of around 15.0. That's if the bullish movement continues. So this is one new price we should be expecting soon. That price should hit 15.0 before the end of this year. Alright, then at that point of 15.0 we can then expect some other changes in price, probably a new correction, and that correction will probably go a longer way in response to the what's it called, the Elliott wave correction. All right, so now so far we know price is going to stay within this triangle from the last candlestick there at my right towards the triangle. Price will stay within that region and tighten up to that point where I was talking about. So let's see how price goes in the coming days. For intraday traders, intraday merchants, let's see this chart. This is the 4-hour chart of the NIR protocol USDT. Now from this chart you can see the highs and the lows. The highs are higher, getting higher, and the lows are also getting higher, confirming the bullish movement. So at A, you see the low at A, you see the low at B, and you see the low at C. All of these lows are higher lows. And the next low we're seeing there, the next low here, is the last low we're seeing at the extreme there by the right side. That's the new low. That low is as a result of the large volatility that occurred some days back. So we're hoping that, yes, from this low now we're going to have another correction. So there will be some price engulfment within that region. So let's say in about 2 days or more, we're going to have price falling a little bit, then kicking up back to the bullish movement. So this is a pure correction because price has tightened up. It was going high from A, kept going high, had got to B, and continued going high, got to C, now made a higher spike up there. That's why we're getting this correction. So after this correction we're going to get a better upward move. So we're expecting more bullish movement. So let me show you, let me add the indicator, the Bollinger Band indicator, so we'll see what we have. Okay, you see that now. So far from the Bollinger Band indicator, you see this, there was a tightening here, a squeeze here that brought about the volatility within B, and another squeeze here at C that brought about this other volatility here. Now that the candlesticks rest on the middle band, we're seeing a new candlestick forming there just below the band. If that candlestick completely forms and it stays below the band, then it should be heading for the lower band. It should be heading for the lower band. That will be a proper rebound. The If the price finishes above, that is the candlesticks now, the candlestick that's forming, that last candlestick, if it finishes above the middle band, then price could go back to the upper band. So that's what we should be expecting for today's trade. So for today's trade, let's just wait to see the completion of that last candlestick. If it stays below the band, then you can go in for a sell, because as if you're doing futures trading or contract trading, you can go in for a sell because the price is going a little bit downwards. But if it finishes above the middle band, then you go for a buy. All right, so that's what we have for the 4 hours chart. Yeah, we're still on the price action analysis for intraday traders, so we're using the 4 hours chart. Now, looking at this chart, the horizontal line we find there at point A is the support we had before the bullish movement to the point above C. So the support there was at 6.78, but now because of the new bullish movement, there is a new support zone, and that support zone rests at point. Let's say, okay, the new support zone is currently at a price of 9.96. So price shouldn't go below this point in the coming weeks until it hits $15, until near hits $15. So, and take note, we're looking at near getting to $20 before the end of this year. So near is heading for $20 before the end of this year. So now our new support zone is at $9.96 within that range. That's the new support zone. So price should not break that zone and come down. If it breaks that zone and comes down, then price should be heading for the previous support zone, which is around look at this region here. Yes, at this region, this point, 8.9. Price should be coming for this other support, 8.9. Okay, and price should not break that point, 8.9. So that is what we should be expecting. All right, so for now, price should be going back upwards because it has gotten almost to the barest minimum of the new support zone. Yes, price is currently at that point, so there is a bounce off again. It's going to bounce off again and continue in the upward direction.